Now, the Departmental Committee on Finance and Planning has hinted that it might not consider the submissions opposing the motor vehicle tax, citing the financial implications on the 2024-2025 budget. The 2.5% tax, capped at 100,000 shillings, aims to collect a whopping 58 billion shillings in revenue. But as NTV's Sydney Chazima now reports, motor vehicle insurance providers are warning that the 58 billion shilling mark may not be attained, adding that Kenyans will now opt for dubious means to insure their vehicles.
As the second week of the public participation exercise on the Finance Bill of 2024-2025 commenced, motor vehicle insurance providers moved to oppose the newly proposed 2.5% tax on motor vehicles.
We are bringing in an additional cost of another 100,000. In the first place, we are not able to pay the 200,000 shilling instantly. But the 100,000 by way of tax, this has no room for installment. Frankly speaking, I think we are punishing Kenyans.
According to the insurance providers, a majority of motorists are on third-party insurance. They argue that with the new tax, the little margin of those on comprehensive insurance cover will further shrink.
And this has two double effects. One, the penetration, the contribution of insurance to the GDP, of course, will come down, as we demonstrated with what is happening in Tanzania. But more importantly, we'll be exposing to Kenyans. We'll be exposing Kenyans to out-of-pocket expenses.
But the Finance and Planning Committee Chair, Kuria Kimani, claims that it may not be possible to do away with the motor vehicle tax.
On the other option then, if we have to really get rid of it, would be to reduce the budget by 58 billion. Now the problem is nobody wants the budget to, okay, not this side, but the political side, including the one against it, don't want to reduce the budget. No, I'm telling the budget committee.
The Kenya Private Sector Alliance proposes that instead of the tax on motor vehicles, Treasury and Parliament should effect an additional 1 shilling on the fuel levy. KEPSA also wants Parliament to remove the burden of enforcing the collection of the levy should it be passed as it is.
Let it not be the responsibility of the insurance companies to be enforcing. Let Kenya Revenue Authority and the NTSA be the ones to actually enforce this, and the insurance industry be relieved from the burden of enforcing compliance with tax legislation.
The nation will be keen to know whether the opposing sentiments and proposals on the motor vehicle tax will be taken into consideration. Sydney Chazima, NTV.